Hello and welcome to the Investing Success Show. I'm your host, Brian Patton, along with my co-host, Adam Whitmire.
Glad to be here.
And today we have some special guests. We have Drew Walker from Georgia Primary Bank, and Thomas Rockwood from Georgia Primary Bank. Appreciate you guys being on the show. We want to talk a little bit about lending as it relates to commercial real estate and buying and selling businesses. So that's why we had you on the show today. Welcome.
Thank you. Yeah, thank you.
Drew, tell us a little about Georgia Primary Bank. I know it's a fairly new bank in the Forsyth County market, and y'all been around how long in the Roswell market?
We have been we're headquartered in Buckhead, and we have been in business for just over 10 years.
Okay.
They had their 10-year anniversary actually when I came to the bank, which was in 2017. And it's an independent community bank, and we have opened up a loan production office in Forsyth County, and that's the office that I'm located at.
And I was your first customer. I was for your first loan there.
Brian was first customer.
How long ago was that?
To the bank.
10 years ago?
No, a year ago is when they opened the Forsyth County branch.
Okay.
And I got a fabulous rate. You probably won't get that rate. I got a great rate. I got a friend of Drew rate.
Well, I'm glad you're very happy.
I am very happy.
Thank you.
It was a very good experience as well.
Is there
not
a
just the
coupon
rate.
code to get that rate?
BPC, Brian Bank Commercial.
I thought it would start with that.
So, I've been real happy with getting to know you guys. And Thomas, you're in the SBA lending side.
Correct. Yeah.
So, you've been with Georgia Primary for a while?
Yeah, since the beginning of 2017.
Okay, well, good. So, let's start a little bit about diving into commercial real estate and sort of the SBA programs. Well, first, let's Drew, give me sort of a background. Let's say you're looking to buy a piece of real estate that's an income-producing property. Sort of lay out for our listeners the conventional side and the SBA side, how that works together.
Well, I'll let Thomas get detailed on the SBA side, but generally on the conventional side, it's pretty straightforward. A person, investor finds a piece of property that they've identified that's either income producing or it's not income producing, but eventually will become income producing, meaning it's vacant and they're going to lease it up. And they've identified it as something they want to buy, and then they come to us and they say, I'd like you to finance the purchase of this property. And from there, it's generally a pretty straightforward, easy process of trying to understand what they're trying to accomplish, how much money they want to put down when they purchase it, how long they want to finance the property for, what their goals are in terms of paying it off. It could be I want to pay it off over 20 years. It could be I want to pay it off 10 years, 5 years, and really understanding what their business model is and why they're doing this, so then we can put them in the best product that makes sense for them, that helps them succeed, and if they succeed, then we succeed, and that's how it works.
And the SBA side of that really helps the local bank from a guarantee standpoint, correct? Because generally you're financing 40% of a deal with SBA lending, and with SBA doing 50% of it.
Well, and so I guess there's a couple components. We started out with the conversation saying investment real estate, right? So for the investor out there, as long as one of your companies occupies 51% or more of the space, that would be eligible. So you can have a property that you receive rental income from, as long as the owner of the property owns a business that's inside that property, and they occupy 51% of the space. So the financing structure you're talking about there really is with the SBA 504 program, and there's commonly two programs that borrowers go with. It's either a 504 or a 7A program. But the SBA will take a portion of whatever the SBA loan is, and they're going to either make that loan directly or they're going to guarantee that loan, and the bank has a lower exposure.
I think it's important to separate the two that Thomas handles, because SBA is only owner-occupied properties, meaning the person that is purchasing the property plans to occupy it for
at least 51%.
At least 51% for their primary business. On the conventional side, we also do owner-occupied properties, but we also do what's called commercial real estate investment loans, which is I'm buying a shopping center or an office space or a couple of rental properties or something to that effect that's not owner-occupied, which is that's not the primary use for that, but which would not be an SBA qualifiable loan, but we do those on my side, which is called the conventional side.
Gotcha. So SBA is primarily for someone wanting to start a business, grow a business, but it's for the operator themselves.
Yeah, so the U.S. Small Business Administration, they're in business. They're basically trying to say, look, you have a small business, you need access to capital, right? If it's not available on conventional terms, they're there to really provide a vehicle for banks to say yes, right? So by helping provide a different term or a different structure, the borrower can most of the time achieve a lower monthly payment, which helps them qualify in terms of cash flow, right? Being able to pay for that every month, or it's cash injection. How much do they have to put into the project? So if they're not eligible for one reason or another with a conventional loan, then they could be eligible for an SBA loan. And so it's really the government's way to say, look,
Kind of guarantee,
yeah,
make sure.
as a way to make
Guarantee
sure
may
that,
be the wrong word, but to help ensure that that money gets placed for those business owners.
yeah, I mean, the intent really is if there's not access to capital, this is a vehicle where they could possibly get a yes.
Get access to capital.
Right.
Interesting. And so what type of things can be purchased in an SBA loan typically?
As long as it's
Can it be used for?
as long as it's for the small business concern, right? So if it's going towards the improvement of the subject real estate, or it's going for the inventory or operating assets of the actual subject business, then it's typically eligible.
Is it always an existing business, or what about it could be a new business?
Yeah, no, great question. So the SBA doesn't have necessarily a requirement on has to be an existing business. We do a lot of startups, business expansion, so a second location. The SBA looks at it and says, okay, you can use projections, and as long as there's assumptions and a business plan that goes with those projections and it's reasonable, then the bank can approve it through one of those types of loan structures. So there's a lot of different ways to get approved in new businesses, existing businesses, businesses that are going through a tough time, or businesses that are seeing rapid expansion. Typically are the ones that are saying, look, we're growing beyond that normal ratio that allows us to self-fund that growth, and we need additional funds.
So let's talk a little bit about rates. I know you don't want to give out numbers because those fluctuate, but are you constrained by the SBA on your rate, or is that a competitive market?
I think it is very competitive.
Okay.
The SBA is trying to provide what they're going to call fair lending, right? They want to make sure it's not predatory by any means. And so they do put a restriction on what banks can provide on a kind of a top end, right? So they say no more than.
Gotcha.
So depending on the program and depending on the loan, the SBA will say, okay, this is the max rate that you can charge.
So the individual bank makes a determination on the actual rate as long as it doesn't hit the cap.
Right, exactly.
Okay.
And again, there's two primary programs that borrowers pull funds from, and that's the 504 and the 7A loan program.
Mm-hmm.
So the 7A loan program, depending on what the borrower is trying to do, typically has a maximum interest rate of prime plus a margin of 2.75%. On the 504 side, the bank has a component and the SBA has a component, and the SBA is in control of their rate and the bank is in control of their rate. So it's two different structures depending on which loan program, and they're set up for essentially different purposes. But the SBA does oversee and ensure that the borrower is getting what they're going to say is a market competitive and reasonable interest rate.
And are all the SBA terms fixed terms, 20-year fixed typically?
No, so if we go down the fixed rate real estate side, the SBA offers 10-year fixed rate funds. They offer 20-year fixed rate funds, and recently in the last couple of years they started doing 25-year debentures for their portion of the fund. So they'll do up to 25 years fixed rate. And at the time of the debenture funding, that's fixed for the life of that loan, which is pretty exciting, right? So 25-year fixed rate.
Well, I think that's probably why most of my clients choose the SBA, because is the fixed portion of it. I guess typically, Drew, the conventional side is not fixed for that long. It's typically a 5 to 7 year. Is that what you see, fixed rate?
Generally speaking, most banks will fix their loans for a shorter period of time. They call that a balloon.
Right.
It's not to say that they won't do what's called a self-amortizing loan, where it's fixed for the entire period. There are those; they are available out there, but you see more times than not a bank saying, "We'll give you a 3-year rate, a 5-year rate, a 7-year rate, a 10-year rate, or even a fixed or a 15-year rate," before that loan has a chance to reprice, so to speak. Sometimes it could be it could be a whole gamut of scenarios, but it could be the loan matures, it's subject to renewal, and you can go out into the open market and talk to a variety of banks about repricing that loan and renewing or refinancing that loan. Or you can set it up to where there's rate resets throughout the entire life of the loan. The door is very open and flexible for those on the commercial side on how that's handled. And as Thomas had said, it is also very market driven as well. If everybody in the market is pricing it one way, and you have to remain competitive, and that's what drives those interest rates.
So if you're looking to purchase a business, are we talking about the same? We're talking about the 7A program typically. Is it work sort of the same way as with real estate as well?
So the 7A, if you're doing a business acquisition, and let's say there's no real estate whatsoever, right? There's no long-term fixed assets. 504 is not going to be an option. That's strictly that way, and that's the banks have a lot of leeway in how they structure and what's the term that they do. A lot of times, I'd say it could be adjusting monthly, it could be adjusting quarterly, annually, 3 years, 5 years. You can fix it for the life of the loan if that's bank to bank. Those are all eligible and available options, and depending on what the bank wants to do, how they feel, I guess they're going to price it. They'll proceed forward on that fashion. If there is, I'd say real estate involved, you can get a longer amortization, right? So the business acquisition exclusively, typically that's done on a 10-year term. When there's real estate involved, if it's 51% or more of the project in terms of loan funds, then you can amortize that over a longer period of time, right? So the maximum useful life of real estate in the SBA's eyes is 25 years.
So are you saying you can amortize the business portion? Let's say it's 49% of the purchase price. Can you amortize the business portion just like you can the real estate portion, or is it a different?
Yeah, so in general
allocation?
terms, let's just say it's $400,000 of goodwill that you're buying, and then it's $2 million of real estate. So you have a $2.4 million total project. The borrower's going to put some funds into that. The bank's going to fund the rest of it through the SBA 7A loan, but the majority of those funds are going towards the long-term purchase. So
real estate.
The goodwill component can be financed over the life of the long-term fixed asset. In this case, if they need to buy inventory, or they need to purchase additional equipment, they need to do some of those things. Maybe they need operating capital for one reason or another. All of that can be included into that one loan for that one project, and that amortization schedule and the term of the loan can be adjusted up to 25 years. Again, as long as the majority of the proceeds are going towards the real estate acquisition.
So we've covered the main reasons our clients like to use SBA is typically price. Rate is real competitive, and you can fix it for a long time if you choose to do so. The other thing is the 10% down typically. Now, is that in both of those programs, the 504 and the 7A? Is that a typical percentage down that you can do it?
Yeah, so the 504 program is going to be 10, 15, or 20% cash injection, depending on a couple different factors, right? If it's an existing business that doesn't have a special use property, it's typically going to be 10% cash injection requirement for what we're going to call is the total project. Acquisition plus whatever you're trying to do and the closing costs. If it's a brand new business and it's a startup, the SBA kicks it up 5%. If it's a special use property for whatever reason, it's going to kick it up 5%.
What are you calling special use property? Like a hotel?
So
like that?
Hotel's a great example of, a hotel is probably only ever going to be a hotel. It's not going to be an office warehouse. It's not going to be a distribution center. It's not going to be a medical facility, right? So that's a great example. That kind of special use property, and if it's a brand new operator that doesn't have any background in that experience, it's probably going to be a 20% cash injection. But existing person that's got, or an existing company that's got lots of background in the industry, and they're trying to make an acquisition of another hotel, probably be 15%.
And is that decision made by the local bank or the SBA?
So every bank in a 504 scenario works with a certified development company, or a CDC, and they're actually the ones who are going to be representing the SBA in the transaction. They're going to basically qualify what the business is, what they're trying to do, the eligibility of those funds, and then they're going to work to get the SBA approval directly to the SBA. So they're really the ones who would be partnering with the bank and then discussing in general, here's what we're going to do and here's how we're going to do it. The bank does take the lead typically, and then they'll involve their CDC that they choose to work with at that point. But the SBA in those 504 loans does approve it. They have final authorization, and they're the ones who are saying, yes, go, this is an eligible project.
No, that's interesting. I was wondering, what kind of businesses do you guys see often? Is it of mostly expanding, or do you see many like franchises in a lot of areas up here? A lot of franchises are very popular, or is it? I don't know if you'll see a whole lot of in industrial type or medical office type business growth.
I guess for what we see in what we do, I guess, and I'm going to answer it kind of two different ways. There is a lot of growth. There is a lot of new businesses coming in, and a lot of those new businesses are franchises or second, third, fourth locations, and they're trying to expand outside the perimeter. They're kind of growing their box, right? But in terms of what we do work with almost any kind of company out there. We don't have a concentration issue necessarily in any specific category or issue. We really are, we work with franchises, non-franchises, retail and industrial, hotels, all kinds of different
in growth
types
and
of companies.
expansion. And it's interesting. I just wonder what you were seeing in the market today, what kind of growth you were seeing in different areas.
Business expansion, I think, is almost happening, in my opinion, in every different category and every different sector.
It's great.
All of those companies, they're saying, we need funds, we're growing, we're expanding. It's a positive. So, as our economy expands, so are our local businesses, and that's a good thing.
So I hate to bring up negatives, but we hear negatives in the marketplace, and I guess probably two of those are the red tape and the length of time it takes to do SBA loans. Can you tell us a little bit about that? Is that warranted? Is that justified? And what do you see from a timing standpoint?
I would say that the pushback or the negatives that you hear in the marketplace, I'm going to broad brush that one and say, that's the lender's job to set the right expectation up front. Working with an experienced lender, they're going to be able to tell you this is what it should take, this is how we need to navigate this is what we're going to need to do. A ground up construction project, that's very different than just saying, hey, I'm going to buy an existing piece of real estate. So that project probably won't happen on the same scale and the same timeline. Same with the expectations on what's required to get to a closing, what's required to get to a full funding, and those sorts of things. So who you work with matters. Their expertise and the type of loan you're trying to do matters. So I think that's an important piece of the pie. In my opinion and in my experience, if you're working with the right group and you're the right team, it can be very efficient, right? There's not a big reason that there are a lot of delays. Now, that being said, if you're working with a lender that has to get direct approval from the SBA, there's a level or a layer of approval that's going to go through that you wouldn't have to go through if you work with a lender such as Georgia Primary Bank that is a preferred lender, right? So if we're doing a 7A loan, for example, where we have delegated access and delegated authority to basically approve that loan on our own accord, given certain constraints. But, for the most part, that shaves off time, right, to get to a closing, as you kind of mentioned. On the 504 side, there's the CDC's involvement, and they're going to submit directly to the SBA every single time. So again, the lender setting that expectation up front on the timeline and what's going to be required, that's important.
Okay, that's a good point.
So is there like a range? Are we talking 6 months?
6
8
years.
months, 12 months,
Right? Yeah, those are all
so you're because
horror stories.
Because it's sounding like partially it could have to do with the type of loan you're getting, the type of business that you're trying to fund, and the type of growth that you're trying to get in your business. Some of them obviously are a lot easier than others, so it sounds like just a little qualification process. But it's just different.
I would say that every loan request, every company, every owner, every structure, they're all different, right?
Yeah.
How many owners own the business? That really is a caveat to then saying how much do you have to get, and if there's only one owner, then that's only one individual that you have to really kind of dive down on. But if there's 5, then you got to do that on 5, right? So, again, working with the right lender, they're going to be able to ask a lot of the important key questions up front, get that information, understand all of the moving parts, and then say, okay, here's what we're going to need to move forward. Now, I will say that to underwrite a loan is the same process. You would need to get similar information. I wouldn't say that on the conventional side there's less work that goes into underwriting a loan. There are government forms that again, if you're working with the right bank, I think they're pretty easy to navigate and move through. But if it's not eligible, then the conventional loan process is the route to go. But appraisals, environmentals, construction due diligence, those are all going to take place,
So
in my opinion, on the
basically-
conventional side as well.
Yes.
So what you're telling me is, so I've got my business and I'm wanting to expand or open up another location. I'm going to give you, hey, this is what kind of business I've got. This is what I'm looking to do. These are the parties involved. And then you're going to tell me, okay, well, this is what we can do and how long it's going to take. This is what the process is going to look like.
Right.
That's where you'll give me, a better understanding. What if I just come up to you with a business idea? I'm through this, and I know you're not the one
Sound like you
qualifying.
might have one.
Yeah. If I come up with, I'm kind of really good enough. If I come up with your business idea, aren't you going to want some kind of experience or background from me somewhere along the lines? I'm going to have to qualify, or is it just I'm an investor putting money into a franchise and don't have any experience?
Yeah, no, those are great questions. So if you're an owner and you've been running a business for the last 20 years and it's successful, and we can see that in the financials and the background and the company, that's one thing, right? But if you're saying, hey, I've got this concept, as you said, I want to do this franchise, or I want to do this company, I want to start this, you're going to have to discuss a little bit about why you think this is a good fit for you, right? And why is it that you're looking to do this, and how is this going to work? The management resume is important, but more to
Sure.
the point, to say your personal experience in the industry is critical. I would say more times than not, we're lending to a person. Yeah, the company's the borrower, but it's always the captain of the ship that's really going to be driving that forward. So we try to get to know that the business owners themselves and say, okay,
So
does this make sense?
If most of my experience is in real estate investing or investing in business, and I want to open up a Beanie Baby store, I would have to have something really concrete.
I've got some I'll
right?
sell you.
Yeah, retail is a very different industry than real estate investment,
Okay,
right? So,
yeah.
and that's where, talking to somebody up front about what you want to do, there's a lot of advice, right? There's a lot of experience on the other side of the table, hopefully, that can say, hey, is this the right path for you? Is there a business partner
So you
that
can
makes
actually
more
kind of help
sense?
guide them a little bit along the way to be good at, to give them some advice and such. No, that's good. That's great.
Yeah, and I would
Very
say, relationship, right? So start with the conversation, build a relationship, and talk about what are you trying to do and how are you trying to do it. And then, from that perspective, there's a way, in my opinion, to get to a yes. It's just going to be saying, how do we get there, right? So, if a loan request is sat in front of you and you say, make a decision today, well, okay, well, that's one way to do it, right?
Yeah.
But if you've got a vision and you want help and you want assistance, absolutely.
You can get some guidance.
Yeah, come talk to us and we can figure out.
No, that's great.
Here's what you might be looking at. Here's some of the challenges. Can you mitigate any of these
Is
issues?
there like a minimum and a maximum loan amount typically for a business or an SBA?
That's a great question. So the SBA does have a maximum loan amount of $5 million
Okay.
on their portion.
That's a lot of Beanie Baby stores.
Yeah,
A
that's
lot of Beanie Babies.
It's a lot of Beanie Babies.
You're starting the manufacturing company in your 100,000 square foot warehouse if you're borrowing those kinds of funds, right?
I may have missed that window. But no, that's good. Is there a minimum amount?
There really is not. Banks will set their own minimums and their kind of appetite and where they're at. But there's a loan program. If you need dollars for your business, any amount, there's funds that the SBA provides that entrepreneurs should have access to that capital.
Wow, that's great.
I will
That's
tell you,
excellent.
you mentioned relationships, and that's why I love community banks. And there's not very many of you guys around anymore, but I can call Drew Walker on his cell phone. I can call Thomas on his cell phone and get my banker on the phone. And you
Yeah.
don't see that much anymore. So many banks are big, and they're, you feel like you're dealing with government
It's a
bureaucracy.
revolving door.
It's a revolving
moving
door.
people around from one branch to the other branch, and then nobody knows you. When
Exactly.
You go in
You got to go in and show 15 forms of ID and a DNA analysis just to
That's
make
right.
a deposit. And
That's right.
I'm just very happy that you guys are part of my team, and that there's a relationship there, because that's banking used to be all like that. You knew your banker.
Relationship.
You knew your banker. You saw him at church. You saw him at Rotary or whatever, and you probably went and played golf with him. And that doesn't happen as much as it used to. And I just applaud you guys for sort of keeping that community bank alive, because that's, as a business owner and as guys that deal with business owners, that's very important for us. Because it just makes our lives are tough enough, dealing with bureaucracies and taxes and all those, and payroll and all that stuff. So you guys make it easier for us, and we do appreciate that.
Yeah.
So tell them how to get in touch with both of y'all. Drew?
So,
Thomas?
the best way to, you're always welcome to email us, call us, look us up on the website. My email address is trockwood@gaprimary.com. That's probably the easiest way to get a hold.
And mine's dwalker@gaprimary.com, and my direct office line's 404-504-8333.
And he will actually answer the phone.
No, that's great. That's wonderful. You don't have you don't route that through India. You just come straight to your desk
It
and
goes
just pick
straight
it up.
to my office in Cumming, Georgia.
That's wonderful. That's what we like to hear.
Well, we appreciate you guys being with us today on the show. This has been the Investing Success Show. Please make sure that you like us and subscribe to our YouTube channel as well as all your podcast locations, and we will see you next time on Investing Success.